Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, um, I'm going to make a new buy recommendation on a U.S. small cap stock that has huge upside, but of course, with that, a lot of risk. So, with that, let's get into it. First of all, I'm turning over. This is not a call on the overall market, but I do want to show you why I'm recommending a U.S. stock. I've been recommending emerging markets, commodities, all these things that have outperformed the market. We are going into a bullish time for the S&P 500 from now through May. So again, seasonality is just a tendency. If you remember in December, we were supposed to get a Santa Claus rally and it didn't happen. It didn't happen the year before. So, but I am cognizant of this and we do want to have some money in different spaces. So seasonality turns bullish. On the bearish side of the market, this is the Dow, and we have an ending diagonal pattern, two converging trend lines that started back in 2022, and we're right at resistance. So, you want to buy at support, you want to sell at resistance. So we're at resistance. Can it hang on for a few months? We'll have to see. The other thing in the corner of the market is QE, quantitative easing, which the Fed is doing in a different way. I guess maybe people don't realize that, they're spending more of our money, but they're giving their money, our money, to the banks, selling treasury bills, very short term, 3 to 5, not even 5 months, like 2 to 3 month treasury bills. The banks need to buy those and it gives them money. They're buying treasury bills from the banks and they're giving them money. So that gives them more money to spend. And what do? They plow it back into the market because that's where they get their best return on equity. So those are two things I just want you to be cognizant of. This is the big picture of the stock that I'm recommending. Gamestop, the video stores, the gamer where the gamers go, and these are in all your strip malls across the country. And it's been a very volatile stock over the life of this. And I was fortunate enough to make a lot of money back here when it went into a third wave, according to the Elliott wave theory. Trends or cycles go in waves of five, but bought it back here. This was one of the big performers that, CNBC was talking about this, and AMC theaters, and I own both of those. They had huge people shorting them all the way down, and they got squeezed, and the stock popped like, from kind of what was it, like $1 to 125 or something. So, where do I think we are in the cycle of this? So, the looking at cycles, I use the Elliott wave theory, which believes trends or cycles go in waves of five, with one, three, and five in the direction of the bigger trend, and two and four are counter trend reactions. So, we should be in the fifth wave. And within that fifth wave, we had our first wave up and now a second wave correction. And I think it's given us a time to get in to the third wave. Third waves can be the biggest, most profitable, most lucrative to own. This was the actual whole third wave back here. So, that's normally what I look for, but this is at least a third of a fifth wave. So again, I think the potential here is for a new high. And we're currently at 22 and the prior high was 120. Now, I'm not holding my breath for that. I just want to make money on it. But so we're going to look at, to give you context, this small part. Actually, this. We're going to look at this, the fourth wave here. And it looks to me like it's a triangle. A, B, C, D, E. So if it can break above, let's call it, I don't know, 27, that would put this pattern in play. And if you measure the base of that triangle and project up, you get $72. Now, again, that's just a landing area. So let's take a look at what's going on short term, why I'm recommending that, why it's still in the triangle. One thing is that when you get these big consolidations over uh, couple of years, when they break out really fast and heavy. Now they could break down fast and heavy. They can break up and fast and heavy. This looks a lot like Platinum did back 6 months ago, which was one of the buy recommendations that went up, I don't know, 100% or something. So, um, I look at these things without a name on it. Looking at GameStop makes me nervous because, it's not like it's not going to change the world, right? So this is the consolidation. We're going to look at this small part here. And what I see here is a confluence of moving averages all coming together as prices spiked over the last couple days. And this is called a bullish rainbow convergence from a la Tom McClellan, who introduced me to this. So I want to give him a shout out. But normally, either prices will sit here while the moving averages move up, and then we'll find out what's happening, or a type 2 convergence is where prices come back to that convergence. And if it holds, it promises a new high. So today, some big investor, and I didn't recognize his name, and I don't really care. Um, CNBC announced that he was buying the stock, and it went in the morning when I bought an initial position, a small position. It was actually flat, or maybe it was up like 1% or something, and then this guy had to be announced, and it went up like 10%. But by the end of the day, it was only up 4%. So I think it's a pretty good place to get your feet wet. Tomorrow, with this rainbow convergence, I'm expecting a retracement back to that. So I'm expecting it to be down in the morning, and I'll be buying it aggressively. And the whole thing is it's got to hold like 21.5. I don't want to see it break this. I'm not going to fool around with it because this thing's too volatile. But that is the setup. Let's look at the point and figure chart. We do not have a bullish trend line. We don't have a blue bullish trend line. We have a red bearish trend line. But we do have a new buy signal where this row of up weeks, up X's, this is up prices, exceeded the last one, and it gave us a new buy price projection of $35. So if we get $35, it's going to break our bearish trend line. We're going to have a bullish one. And if we go back to our longer term chart, 35 is going to get us well outside this triangle and put this in, this will then be intact. So that is my aggressive recommendation. Um, Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends, neighbors, and friends. Have a great evening and good trading to all of us.